A REIT is a powerful investment that is part of many strong portfolios. It provides a steady stream of income and is a good hedge against inflation. A REIT is even more attractive if you can hold the investment in a tax-sheltered investment account like a Roth IRA or TFSA. Let's take a look at what a REIT is and what makes it an attractive investment. REIT is short for Real Estate Investment Trust. This is usually a company that owns income-generating real estate properties, and the REIT trades just like a stock on the markets. Some examples of companies that are REITs include Brookfield, RioCan, and Chartwell Retirement Residences. In order to qualify as a real estate investment trust, the company must distribute at least 90% of its taxable income to shareholders. This is a great rule as it ensures that the company can't hoard cash and that investors are getting the proper return on their money. Here are some key features of REITs. 1. The vast majority of REITs are traded exactly like stocks. This makes them very easy to buy and sell, unlike owning actual properties which can take months to buy and sell. 2. There are a ton of subsectors that REITs can invest in. These can include rental apartment buildings, retail spaces, office buildings, medical centers, and warehouses, just to name a few. 3. If you don't have enough money to buy investment properties, then a REIT is a great way to get into the real estate market. Finally, most REITs pay a monthly distribution. This is technically different than a dividend and will receive different tax treatments. Depending on the REIT, the distributions might be counted as normal income, capital gain, or a return on capital. Don't get scared by this. At the end of the year, your investment brokerage will send you a tax slip, and all you have to do is fill out your taxes with the information on the slip. So how do you buy REITs? You can buy and sell individual REITs directly on the exchanges. The process is exactly the same as if you were buying some shares of Apple or Netflix. There are also REIT ETFs and mutual funds that bundle a bunch of individual REITs together. These can also be bought on the same exchanges. If you have enough money and have found a good REIT, then we would suggest buying enough shares and automatically reinvesting the distributions, so that you can get at least one more share of the REIT each distribution cycle. This will allow you to compound your growth. If you are already heavily exposed to the real estate market, then buying REITs may not be the best choice, as you would likely want to diversify a bit. One last thing to keep in mind is that REITs are not typically going to have huge movements in the price, since the companies pay out over 90% of their taxable profits as distributions. Of course, there are exceptions like the 2008 financial crisis or the 2020 COVID crisis, where REIT prices got crushed and then rebounded. Thank you for watching, and don't forget to subscribe to our channel and like this video.